Good morning, dear friends. It's Wednesday, August 20th, 2025. It's just after 7 a.m. as I'm speaking this. I'm giving you in very quick video the update on the latest financial news for this morning and also covering what happened on Wall Street last night. So last night wasn't a particularly good day on Wall Street. The Nasdaq index fell 1.5% and the S&P lost 0.6%. Not big losses, but higher than usual. The big move downwards came in the technology sector. There were some rather large drops in a few stocks. For example, Palantir dropped 9.4%. That's the fifth day in a row that the share has been dropping. By the way, Palantir is on an extremely high price-earnings ratio. High price-earnings ratio is where you take the price divided by what it earns, and the higher it is, the more expensive the stock is. So what this means is that the amount that Palantir earns relative to its share price is low, or put another way, its share price relative to what it earns is very high. So high price earnings ratio means it's expensive. Of course, expensive stocks are expensive because people expect very high growth. But even so, by any rational standards, I find Palantir's share price to be very, very expensive. Doesn't mean to say it can't keep going up due to the wall of money coming to Wall Street, but right now, for 5 days in a row, it's been going down, and we've been seeing other tech stocks starting to decline today as well. We've had AMD, Advanced Micro Devices is the full name of the company, or used to be called that anyway, maybe it's AMD now. They're down 5.4% last night, and Nvidia was down 3.5%. Nvidia, of course, is another high-flying stock, also on a very high price-earnings ratio. Now, these stocks can keep their high price-earnings ratios if the growth is maintained, and people expect to be maintained as far out as the eye can see. But the reality here is, with all very large and fast-growing companies, sooner or later, you're going to get some competition. At least that's the theory. There's going to be competition will come in, and of course the market can become rather saturated, and the growth will slow down. So at that point, even though they're great companies, they've got great products, it is possible that the price-earnings ratio starts to contract. When the price-earnings ratio contracts, even if you've got growing earnings, it could cause the share price to fall. Well, last night was perhaps an example of that happening. I can't tell you if it will continue or not. Got to be nervous about the wall of money still trying to find its way into Wall Street. So what happens on Wall Street, people, maybe they don't want to buy these high-priced stocks, but they will buy exchange-traded funds, like an ETF on the S&P 500. And when that happens, the money goes into the ETF, and then the ETF, the exchange-traded fund, the managers have absolutely no choice but to buy the very stocks which are in the index represented by the ETF, which means that they'll put most of the money into the top 10 stocks from Wall Street, because those top 10 stocks represent 40% of the S&P 500's market capitalization. So when you buy an S&P 500 exchange-traded fund, you're effectively putting 40% of your money into the top 10 stocks on Wall Street, many of which are very overpriced. Was a bright spark last night in the form of Home Depot. Home Depot is a department store which sells home repair equipment and things like that. They had some very good earnings, and their stock rose 3% on the news, and Home Depot also did something which people like. We call it maintain their guidance. In other words, they said, we expect the results we previously forecast to be achieved. Market like that. But in a way, we've got to wonder, what does it mean when a shop which specializes in home repairs is doing well when perhaps others aren't? And we'll find out in the coming days about the others when we get results from companies like Walmart and Target. But if a home repair shop is doing well, what does it mean? Does it mean maybe that we have a lot more people who are unemployed, and therefore they have time on their hands, and therefore they're doing their home repairs? Or does it mean that we have a situation where money's getting tight and people saying I can't afford to employ others to do the work who'd probably buy from a more specialist store. So I'll go and buy the equipment and the stuff myself at Home Depot and repair my home. I'm a bit short of money. So it could be an early sign of recession, perhaps. Now, coming up starting tomorrow, we've got the Jackson Hole Symposium. Whether we'll hear anything about it tomorrow, I don't know, but certainly on Friday, the big event will be the speech by Jerome Powell. What time is he going to be speaking tomorrow? On Friday, he's going to be speaking, not tomorrow, Friday. So on Friday, he should speak at 4 o'clock Swiss time. So I think if you're in the United States, in Eastern time, that'll be about 1600 Swiss time. Knock off 6 hours, that'll be 10 a.m. So on the markets yesterday, we had this continued rotation out of technology stocks, driving the indices slightly lower. The Dow Jones, by the way, lost 10 points, or almost nothing, 0.1% to 44,922. Although some stocks were going down in the Dow Jones, the good results from Home Depot helped it drop much less. On the bond market side, we saw the US 10-year Treasury yield decline very slightly. It fell from about 4.36 to 4.30%. The move is so small it doesn't really mean anything. We can't draw any conclusions. The longer term yield does exceed the shorter term yield, which means we have a positive yield curve, which is not a recessionary sign at this point. On the foreign exchange front, the dollar index declined very slightly. It was down to 98.0, I think 98.4 yesterday. So that's meaning that people are selling the dollars a little bit. Gold was fairly unchanged. A couple of days ago, it was a bit higher. Today it's 3,319, 3,319. According to what's in front of my screen, it says it's up $4. But I seem to remember a couple of days ago that was earlier in the day. Yesterday, it was about 3,340. So overall, I would say it's coming off. Silver is also coming off. It was 38.01 when I looked yesterday. Now it's 37.16. The screen says that's down 14 cents. It looks like a bit more than that to me. And the gold-silver ratio is 89.3. That means 89 ounces of silver will buy you 1 ounce of gold. Probability of a rate cut in September from the Federal Reserve is currently set at 84.8%, with a 15% probability there'll be no cut at all. Going back about a week ago, the probability of no cut at all was 0%, and the probability of a cut was 100%. So it was after those very poor inflation numbers a few days ago, where we saw the producer price index leap by 0.9% a month. That's annualized more than 10%. Producer price index could be a forerunner, a early warning indicator of what's going to happen to the consumer price index, because the producers are starting to put their prices up, and they'll pass those prices on to consumers sooner or later, which does mean that consumer price index, when it comes out in a month's time, nearly a month's time, could show a bit of a leap too, which is why the probability of a rate cut in early September is not 100% anymore. Now that consumer price index will come out before the next FOMC meeting, so they've got that coming. Tomorrow we've also got the US jobs claims announcement coming out at 2:30. That might give some more indication as to which way the economy is going. That's basically all I've got for today. Thank you very much, ladies and gentlemen. If you like, please subscribe or like, and I'll try and answer the comments, at least in the early part of today. Thank you very much, and bye-bye.